Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions, and if you need any help, check out finding-value.com. That's where I go deeper into all of these individual sectors, individual companies. You can see what I'm doing on the website. We also have some training on the website for technical analysis and some other things. We do have a coupon code still active. May Day is the coupon code. MAYDAY, one word. If you'd like a further discount to try it out on the monthly membership or a larger discount on the yearly, and you can always switch to a yearly if you're a current member. All right, let's dive in. Let's take a look and see what's going on today. So we'll start with the DXY. To me, this still has the characteristics of a strong move higher. There are some things that are showing up. You have a little bit of squeezing into a rising wedge. So we'll see which direction this goes. We could pop out to the downside at some point of this rising wedge. But at this time, the characteristics of the candlesticks themselves still look good to go higher. So kind of a mixed bag going on there. Longer term, this definitely is still bullish. Momentum to the upside. Yields are looking pretty strong today. They started off pretty weak. So in the morning, we saw them come down, and the markets were higher, quite a bit higher, in fact. But then throughout the day, we reversed and started moving on up. That also reversed the markets overall. So a lot of these sectors are very interest rate sensitive, and interest rates moved up across the board, especially on the long end. So this one here is pretty much flat at the moment. It held support on the 2-year, the short end of the curve. Still looks good to potentially go higher. Short term, we could go lower though. In the short term, this very well could hit. But looking at the longer end of the curve looks pretty strong. So looking at the 10-year, we're up 2.5%. We have support right underneath us, and we are moving on higher, especially today. Look at the size of these candlesticks there. The green army showing up, and that looks like it wants to go higher. And I'm not talking about tomorrow. I'm just saying in the short, medium term, the trend is trending higher. Same with the 30-year. Big move today, even a couple of days ago. Trend is higher, and this could break to the upside. What does that mean? It means that the longer end of the curve looks like it wants to go up, and it could break these larger patterns, these patterns here, and that looks like it could on the monthly here, and move its way on up. And that's going to impact the way that stocks are valued as these go higher. And I would say that oil would probably go up, yields would go up, and that could be a headwind for all those interest rate sensitive sectors like technology, S&P 500, etc. Unless the Federal Reserve gets in here, starts buying up bonds to hold the rates down. I mean, we'll see if they're doing that. But this looks like it wants to go on up. TYX-TNX ratio is uninverting, but it's doing it while rates are going up. So we want the uninversion to occur with rates going down for gold to take off. Bond prices are down quite a bit today. Look at that move, minus 1.85%. Like I said, I wanted to see some confirmation that this is actually breaking to the upside, where bond prices could rally and yields could come down. But that's not what we got. We got yields rocketing higher and bond prices getting sold off today. We've got the 2 and 10, the yield curve uninverting, but that's doing it with the curve going up, not going down. A crash or a recession, generally people are running into bonds that forces the yield curve lower, and the short end of the curve goes down faster than the long end. This time, we've got the long end rocketing far higher than the short end. That's what we're seeing at this point. Gold, obviously, it's still well poised in this falling wedge pattern. And with rates going up, it is a headwind. It's a wind that's coming and keeping it, pushing it lower as rates go up. That's that force that's holding it down. So if I were to put the 10-year yield on here, and I were to put it underneath, as rates go up, it's a pressure being applied on it downward for gold. So that's what I mean by that. And I'm just using the 10-year there. Silver, it's still in the pattern, still looks okay. When rates were down, you saw silver take off. When rates came back up, silver sold back off, and it ended up at 0.6. That's the correlation I'm watching. Platinum up a little bit, but you could see in the morning it really ran, and this is the shorter end. It ran in the morning, reversed with yields reversing higher. And then palladium, it ripped no matter what to the upside, but still squeezing. Haven't broken out in either direction, lower or higher. So I think the whole entire precious metals complex is sensitive, especially gold and silver, to rates and platinum. So GDX, it started really strong, like it was going to run, but we ended selling off because of rates. It is still well positioned. Same with GDXJ and same with SILJ. It's all the same. Rates are determining the pricing of these stocks. XAU to gold ratio slightly lower today. It started strong, but reversed, still looks well poised for a move higher for gold and silver mining companies to potentially outperform gold itself. We need the market conditions of those rates coming down. We need those to exist for this to outperform. Crude oil down slightly, 0.34%, but still looks good. We were running earlier in the morning, and then it sold off throughout the day as yields rocketed higher. It does look like to me that this is some sort of like inverted shoulder, head, shoulder pattern, maybe. We'll see if that holds and if we get any sort of rally here to the upside. TTF gas just moving sideways, but momentum is still to the upside. Natural gas down, we're at support, losing a little bit of it, and we'll see if we get a pullback here in nat gas. Our boy XOP, yeah, you know me, looking strong as ever, I say. You've got the big bullish engulfing, and then you get your flag pattern where we could head higher here. Still looks well poised as long as crude oil wants to play to the upside. OIH breaking that downtrend line barely, and we'll see if that sustains above that line to next week is Friday. We got Newcastle coal futures. This is looking good. It's broken out, and I think we are probably going to put in a move at some point, either sideways or higher over time, and this is a retest. I like it. Sprott Uranium Trust selling off pretty hard. It seems like it's following the NASDAQ and other interest rate sensitive stuff, but this actually looks like it wants to go lower here with another bearish engulfing today. UX1, this is the physical pricing just to see what that looks like, and it is consolidating in this downward falling wedge. That's generally a bullish pattern that will eventually break to the upside, in my opinion. But the equities selling off today, URA, pretty big selling pressure day. That is a bearish engulfing, unfortunately, and we'll see what downside comes after this. URNM also putting in a bearish engulfing right at support, and URNJ also getting some selling pressure, not quite a bearish engulfing. So we'll see if there's any follow through there. Unfortunately, we still have some selling pressure left in uranium equities. I thought maybe we could get a little bit of a bounce here. Copper futures pricing, we were up today. It's a small bullish engulfing. The momentum's still downward, so we have to turn this thing around if it wants to move, and we're trying to do that here. We'll see if that occurs. Watch yields. If yields go up, I bet you copper is going to go down. If yields go down, I'm willing to bet that copper will go up. Like we saw earlier in the morning, it was really strong. COPX is still holding on in a bullish formation. Still looks good to go higher if copper goes up, yields pull back. Iron ore just holding steady. Looks like we're just been trading sideways at this double bottom. We've got aluminum up a little bit, but again, we were running earlier in the morning when yields were coming back down. Yields reversed, and so did everything basically in the market. Nickel down a little bit with those yields reversing. We've got MU that also sold off right at support. I like where MU is. Agribusiness ETF looking pretty solid right where it's at, or a potential addition. Now, this one does work well even in an increasing interest rate environment, but it depends on how fast they go up and how scared people get. Emerging markets holding steady. It started strong, but ended a little bit weaker throughout the day from yields. KRE up 3%, looking pretty good there. Big move there. We'll see if that continues. We've got TAN down. It doesn't like those increasing yields. Coming all the way back to a full retest. We'll see if that holds. Lithium down. Doesn't like the higher yields. And REMX down. Doesn't like the higher yields. And we've been coming on back with the yields surging. If I were to put yields underneath this, this isn't a great. Yields going up has pushed this down the entire time since about 2021. We had a nice surge higher with all that money printing, and then lower after yields have gone on up. Baltic Dry Index continues to work its way up 3.4%. Looks pretty good. Higher lows, higher highs. XHB, stick save is what I call it, right on support. Again, this is an interest rate sensitive. It was doing really well in the morning with rates lower, but as rates increased, you can see the selling pressure came about, and we'll see if rates go up, this very well could pull back. Russell 2000 holding steady, quite strong for what it's doing. We've got S&P 500 down a little bit. Doesn't like the rates, guys. Doesn't like the rates. Another bearish engulfing candlestick. Lower, lower, lower. I don't know how the Fed's going to hold this thing up. Same with NASDAQ. Bearish engulfing. Lower, lower, lower. When we get up here, this is lower, 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 and somehow they push this thing up, probably through yields. So if you were to look at yields have been pulling back, and this has drifted higher. But if yields reverse, I don't know how they're going to hold this thing back. They're going to have to buy a bunch of yields. We're also seeing the M2 money supply explode at the same time. SMCI getting a big bearish engulfing. If rates increase here, these very rate sensitive sectors are going to sell off, and they could sell off hard. They saved it. They stick saved it by putting rates on up, and we could do a TNX here. Put it in a new pane. So they were lowering rates here, and that's when this kind of surged on up and is holding steady. But if rates come back up, we could head lower here, guys. We very well could, and I think Nvidia is feeling it too. And again, these are holding up the stock market. This looks like it could go down with a bearish flag pattern. It is not a bullish setup. Bitcoin down a little bit. Again, the momentum's coming down. Technology and probably Bitcoin are very rate sensitive. Liquidity and rate sensitive. Ethereum also down. So all eyes, in my opinion, should be on yields. If yields go up, last time when yields were rocketing, we saw oil and fertilizers and stuff like that do well. But there are other sectors that did very poorly, and a lot of them are very interest rate sensitive here because I think the market thinks that if rates come down, it's going to help the economy. It's going to help lending in the system, monetary lending. It's going to help the housing market, which is all true. If rates go up, it's going to hurt those sectors. It's going to hurt the economy and slow things down even further. But that's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. This weekend, we have a Sunday question and answer session coming up at 5 p.m. Mountain Time. And I will go over some of my thoughts of what's going on in the markets to tell everyone kind of what my thoughts are. It doesn't mean that I am 100% right on everything, but you get to hear my inside opinions on a lot of things. And we can also go over a lot of individual companies and the setups that they've got and kind of how I come to some of these conclusions. All right, guys, that's what we've got. We'll catch you next time. This is Finding Value.